If I told you to choose between holding a 1-ounce bar of solid gold or a handful of plastic bricks for the next 10 years, which would you take? Most investors would choose the gold without a second thought. Gold is safe, it's history, it's bedrock, and most investors would be completely wrong. Since the year 2000, gold has provided an average annual return of roughly 4%. The S&P 500 stock index averages about 8%. But a specific class of retired Lego sets? They have maintained an average return of over 11% year over year, crushing traditional finance for 2 decades straight. There is a secret economy hiding in plain sight. It's a world of scalpers, investors, and gray market vaults holding millions of dollars in unopened plastic. Today, we're opening the files on the Lego economy to find out why a child's toy is now considered a serious alternative financial asset. To understand the Lego economy, you have to understand that nobody is buying these sets to play with them. The value isn't in the plastic, the value is in the seal. Lego has mastered the art of artificial scarcity. Unlike stocks, which can be issued endlessly, a Lego set has a lifespan. It is produced for roughly 2 years, and then it is retired. Once a set retires, the supply is cut off forever. But the demand? The demand often just gets started. This demand is driven by a powerful financial force: weaponized nostalgia. The primary buyers in this market aren't children. They are AFOLs adult fans of Lego. These are people now in their 30s and 40s with disposable income, buying the massive, expensive sets their parents couldn't afford to buy them in 1999. Take the Cafe Corner set, released in 2007 for $140. It was expensive at the time. Today, a sealed box sells for over $3,000. That is a 2,000% return on investment. This isn't just eBay flipping. There's a sophisticated secondary market. Websites like BrickLink serve as the stock exchange for plastic, tracking the daily fluctuating value of every set ever made. Serious investors treat these boxes like fine art. A single dent in the cardboard can wipe hundreds of dollars off the valuation. Condition is everything. But like any high-yield asset class, the Lego economy carries significant risk. The first is physical storage. You can keep $1 million of gold in a small safe. $1 million of Lego requires a climate-controlled warehouse. It is bulky, flammable, and hard to liquidate quickly. Furthermore, the market is entirely dependent on Lego's whims. If a vintage set becomes too expensive, Lego can simply decide to re-release it, instantly crashing the value of the original rare boxes held by investors. The Lego economy is proof that in the modern financial world, value is subjective. If enough people agree that a box of plastic is worth $5,000, then it is. While traditional investors laugh at toy collectors, those collectors are quietly building empires out of bricks. For more deep dives into alternative assets and the hidden stories of wealth, subscribe to the Money Files. We're just getting started.